The economy was even worse shape in 1979 to 1981 than it was during the financial crisis of 2007 to 2008, and the markets were more volatile. In fact, some would say this was the most volatile period ever. The charts opposite, going back to 1940, show the volatility of interest rates and gold. As you can see, there has been nothing like it prior to 1979 to 1982. It was one of the most pivotal times in the last 100 years. Hope you're all having a great day so far. I am looking forward to doing a bit of reading with you this morning and sharing my commentary, and hopefully you learn something and you are going to get some great value from it. I always have a lot of fun, and there's always lots of comments and hearts and different things, so I'm really happy about that. I'm going to go through at the end, and I'm going to go through and follow everybody that sent me something and say thank you. And I'll let you know as well how you can get access to the recordings if you've missed any of the readings and you'd like to be able to go through the whole thing. And if you would like to be able to get in touch and ask questions, and I'll make videos about the answers to how to do those things with regards to finance, and then we'll put them onto YouTube, and I'll tell you how you can get in touch with me so that you can also ask those questions and get those answered on YouTube. But first of all, let's get into some Ray Dalio principles. And we are at the section which is titled My Big Depression Call. I think we're in chapter, I can't remember what chapter we're in. I think we're in chapter 3. Yes, chapter 4 is coming. So let's get started with My Depression Call. The economy was even worse shape in 1979 to 1981 than it was during the financial crisis of 2007 to 2008, and the markets were more volatile. In fact, some would say this was the most volatile period ever. The charts opposite, going back to 1940, show the volatility of interest rates and gold. As you can see, there has been nothing like it prior to 1979 to 1982. It was one of the most pivotal times in the last 100 years. The political pendulum throughout the world swung to the right, bringing Margaret Thatcher, Ronald Reagan, and Helmut Kohl to power. Liberal had ceased to mean being in favor of progress and had come to mean paying people not to work. As I saw it, the Fed was stuck between a rock and a hard place. They either had to A, print money to relieve debt problems and keep the economy going, which had already pushed inflation to 10% in 1981 and was causing people to dump bonds and buy inflation-hedged assets, or B, break the back of inflation by becoming bone-crushingly tight, which would break the back of debtors because debt was at the highest level since the Great Depression. The worsening problem showed up in both progressively higher levels of inflation and progressively worse levels of economic activity. Both appeared to be coming to a head. Debts continued to rise much faster than the incomes borrowers needed to repay them, and American banks were lending huge amounts, much more than they had in capital, to emerging countries. So there's lots and lots of things going on here, and it's all not really very good, and it means that some hard decisions need to be made, and I think it's similar to what we are going through right now. Hard decisions need to be made, and we'll see what happens. In March 1981, I wrote a daily observation entitled The Next Depression in Perspective, and concluded it by saying the enormity of our debt implies that the depression will be as bad or worse than that witnessed in the 30s. This view was extremely controversial. To most people, depression was a scary word used by kooky and sensationalist people, not something thoughtful people took seriously. But I had studied debt and depressions back to 1800, done my calculations, and was confident that the debt crisis led by emerging countries was coming. I had to share my thinking with my clients. Because my views were so controversial, I asked others to track my reasoning and point out to me where it was bad. No one could find any flaws in my logic, though they were all reluctant to endorse my conclusion. And this is very important. I think this is a very good point. So when you think that something is going to happen, if you have a prediction, there's nothing wrong with that. Now, very often, humans are not very good at predicting. Things change, circumstances change, all sorts of different things happen. We're not very good at recognizing certain patterns. We're good at recognizing others, but mathematical, these kinds of patterns, we're not so good at recognizing. But if you take it to other people and get their thoughts, let's say that you have just yourself and you are looking for ideas for a solution to a problem that you have. You might be able to come up with 5, 6 solutions to that problem before you run out of ideas. But if you have 5 people in the room, then each person might have 5 ideas. Now, there might be a couple that overlap, but let's say that you still end up being able to come up with 4 ideas each without any overlap. Now you've got 20 ideas that you can choose from. Now, one of your ideas might be one of the best ones, but it could also be that somebody else's idea is actually better than yours, which solves your problem in a better way, which saves you time, which saves you more money than one of the ideas that you came up with by yourself. This is why when people come to play cash flow, we sometimes have set them up into masterminds, and we are looking at doing that again in the version of cash flow, which is extremely exciting because the power of masterminds is incredible. It allows you to have access to resources and ideas and thoughts and all of these different things. It allows you to have access to energy. So when one person is feeling a little bit down, if the other 5, 6, 7 people in the group are feeling positive, then the person feeling down is automatically going to feel up with them. And because everybody is helping each other to achieve more, generally speaking, the majority is going to be feeling positive rather than feeling negative. So they don't end up pulling each other all down, which is very, very important. So here Ray Dalio goes and actually asks people about his idea, his prediction, and he gets their thoughts as well, which does the same thing as what I was just telling you about with regards to the mastermind. So it is extremely powerful, and I'm looking forward to setting up more of them so that you can have access to the power of what Ray Dalio is doing here. So he has his idea, he's getting other people's input, and he might have missed something. He might have not thought of something. He's going to learn more from that process, and he might be able to make better investments because of the input other people give him. So he might have forgotten about something, and he goes in and invests in something that will protect him against inflation, for example. But somebody points out that there might not be as high an inflation because he's missed something. So he would be in the wrong asset class, he would be losing money, as opposed to having these conversations. And he might learn something that prevents him from buying the wrong asset and puts him in the right category. So very, very fascinating. Now, obviously, it doesn't always work that way. He might take somebody's advice and they are wrong. But at least you have access to more ideas and you can choose what you think is the best one. And there's a greater chance that it is a good one if everybody offers their ideas independently. There's a phenomenon called groupthink that you want to avoid, when everybody listens to the first person, then the second person, then all of a sudden everybody just starts copying what everybody else said because they want to sound okay. They don't want to be the wrong person in the room. And sometimes they have an idea that's actually better than what the first people said. But there you have it, groupthink. People will then start following the first person so that they sound like they are saying the right thing, even though they may not be. Okay, here we go. Because I believe that the choice was between accelerating inflation and deflationary depression, I was holding both gold, which performs well in accelerating inflation, and bonds, which perform well in deflationary depressions. Up until that point, gold and bonds had moved in opposite directions, depending on whether inflation expectations rose or fell. Holding those positions seems much safer than holding alternatives like cash, which would lose value in an inflation environment, or stocks, which would crash into depression. So there's some very important lessons in there. So you have your gold performs well in accelerating inflation, which we have right now, and bonds, which perform well in deflationary depressions. Interesting thing being that gold is an interesting one at the moment because a lot of alternative people have found cryptocurrencies, and those have been all over the place, but those are an alternative form of asset that people have been putting their money into. So I think that a lot of the money that would have gone into gold has been going into these cryptocurrencies, which is why gold has been, for the times that we are going through and the inflation levels that we have, gold would have been much higher and would have climbed a lot faster. And I think that cryptocurrencies have actually slowed that growth of gold recently. At first, the markets went against me, but my experience with silver and other trades had taught me that I had a chronic problem with timing. So I believed I was just early and what I was expecting would happen soon. That didn't take too long to happen. By the fall of 1981, the tight Fed policies were having a devastating effect. My bond bets were beginning to pay off, and my kooky views were starting to look right on. In February 1982, the Fed temporarily added liquidity to avoid a cash crunch. In June, as the scramble for liquidity intensified, the Fed responded by printing money, increasing liquidity to its highest level since Paul Volcker's appointment. But it still wasn't enough. The greatest whipsaw ever. I'm assuming that a whipsaw is a seesaw. Let's have a look. In August 1982, Mexico defaulted on its debt, but then it was clear to most everyone that a number of other countries were about to follow. This was a huge deal because US banks had lent about 250% of their capital to other countries just as at risk as Mexico. Business loan activities in the US ground to a halt. Because I was one of the few people who had seen these things coming, I started to get a lot of attention. Congress was holding hearings on the crisis and invited me to testify. In November, I was the featured guest on Wall Street Week with Louis Rockefeller, the must-watch show for anyone in the markets. In both appearances, I confidently declared that we were headed for a depression and explained why. After Mexico's default, the Fed responded to the economic collapse and debt defaults by making money more readily available. This caused the stock market to jump by a record amount. While that surprised me, I interpret it as a knee-jerk reaction to the Fed's move. After all, in 1929, a 15% rally was followed by the greatest crash of all time. In October, I laid out my prognosis in a memo. As I saw it, there was a 75% chance the Fed's efforts would fall short and the economy would move into failure. A 20% chance it would initially succeed at stimulating the economy, but still ultimately fail, and a 5% chance it would provide enough stimulus to save the economy but trigger hyperinflation. To hedge against the worst possibilities, I bought gold and T-bill futures as a spread against euro dollars, which was a limited risk way of betting on credit problems increasing. Okay, so he is making his predictions. He is figuring out what he thinks will happen. And he is buying assets that are going to be able to protect him based on the highest percentages. And he also has a couple of assets that will protect him for some of the slightly less likely chances. So he's hedged it based on his predictions exactly. And obviously he's had to talk to other people in order to be able to look into that. I was dead wrong. After a delay, the economy responded to the Fed's efforts, rebounding in a non-inflationary way. In other words, inflation fell while growth accelerated. The stock market began a big bull run, and over the next 18 years, the US economy enjoyed the greatest non-inflationary growth period in its history. How was that possible? Eventually, I figured it out. As money poured out of these borrowers' countries and into the US, it changed everything. It drove the dollar up, which produced deflationary pressures in the US, which allowed the Fed to ease interest rates without raising inflation. This fueled a boom. The banks were protected both because the Federal Reserve loaned them cash and the creditors' committees and international financing restructuring organizations, such as the International Monetary Fund and the Bank of International Settlements, arranged things so that the debtor nations could pay their debt service from new loans. That way, everyone could pretend everything was fine and write down those loans over many years. And this is exactly what I mean when I say, throughout history, things change. So there is a Great Depression, and then things might look like it's going to be the same. But after the Depression, people make adjustments. They say, oh, we didn't do that very well. We're going to have to put something in place to prevent this from happening again. So after the Great Depression, they created the IMF and different other things in order to be able to protect people from problems of this Great Depression. So afterwards, it's been more challenging to get into a similar kind of depression because different things have been put in place to protect us from it happening again. So this is something that you have to keep in mind when you're thinking about what the future could hold. And as I said, humans are very bad at predicting the future. So we like to make predictions. When we get it right, we like to think that it's because we are very smart. When we get it wrong, we like to think because, I don't know, we'll blame it on somebody else probably. But the idea is that you want to learn as much as possible. You want to understand how certain things fit together. It's impossible to be able to fit the whole thing together. There are so many moving parts and so many pieces to an economy that there is no way that one person can figure it all out on their own. Computers might be able to do it to a certain extent, but even they would struggle with the amount of moving parts and the amount of change that happens. So after the Great Depression, the computer might be able to take all of that data and say, okay, I've learned from that. I know what the future will bring. But because of things that we've put in place to protect ourselves from that happening again, the computer doesn't have the information of how that will create things in the future. So it might see the same scenario and say there's another depression coming. But because we've put some things in place to protect ourselves from that, it might actually create a completely different scenario. So that's something that you have to keep in mind, learn as much as possible, and start to see some relations that can give you an indication of where it might go, but be ready to pivot if it doesn't go the way you think, because as I said, we are not going to be able to predict exactly. And this is perfect proof. Ray Dalio used all of his historic knowledge and data in order to be able to make a prediction. That prediction wasn't correct, but he was able to pivot, and he saw that he wasn't right. And he was then able to change what he had done in order to be able to create the new system. And this is what I always get people to have a look at in the cash flow game as well. Because when we play cash flow, people start to create a strategy, and they'll keep following that same strategy. But what you need to start looking at is, can I adapt my strategy? Can I create different strategies so that when this is happening in the game, I change my strategy. When something else is happening in the game, I change my strategy. And so you need to be able to adapt your strategy based on what's happening, because you will not be able to predict the future. So there I was after 8 years in business with nothing to show for it. Though I'd been right much more than I'd been wrong, I was all the way back to square one. At one point, I'd lost so much money, I couldn't afford to pay the people who worked with me. One by one, I had to let them go. It seems Ray Dalio didn't manage to pivot as much as I thought he might have. We went down to 2 employees, Coleman and me. Then Coleman had to go. With tears from all, his family packed up and returned to Oklahoma. Bridgewater was now down to just 1 employee, me. And this is why I always talk about being able to hedge. You don't want to have everything just in one thing. So in this case, the business is investing, which is going to make it a little bit more challenging, because I suppose in a way, this kind of business is going to be hedging. But you want to be able to have other forms of income that will come in no matter what happens to that business, because otherwise you end up in a situation where you're not going to be able to pay people. So if you're a business owner, if you're an investor, make sure that you have multiple streams of income, and that you know how to hedge multiple streams of income. If they're all similar kinds of income and they all go down together, then that's also not good. So you need to hedge so that you have the right balance and the right types of assets in order to be able to protect yourself. So this is something that I want to do more with people around this year. We're going to talk about it at cash flow. We're going to talk about all of those kinds of things, how to protect yourself. Let me quickly make a note of that, so that we can put that into the cash flow lessons that I am creating right now. We're creating a 10-module system that people can go through in order to be able to learn the game properly, and then learn how to implement it in real life. Okay, here we go. So we're down to 1 employee, me. Losing people I cared so much about, and very nearly losing my dream of working for myself, was devastating. To make ends meet, I even had to borrow $4,000 from my dad until we could sell our second car. I had come to a fork in the road. Should I put a tie on and take a job on Wall Street? That was not the life I wanted. On the other hand, I had a wife and 2 children to support. I realized I was facing one of life's big turning points, and my choices would have big implications for me and my family's future. Okay, we're going to leave it there. Next, we have the chapter, or part of the chapter, finding a way past my intraceable investment problem. Intractable investment problem. There we go. So we will find out whether Ray Dalio puts on a tie and goes and works for a corporate company, or whether he finds a way to continue with his business. Okay, I hope you enjoyed that. We went nice and deep, and we had a lot of discussion on that one. There was a lot of commentary, which is what I think sets it apart from everything else, which is why I hope you join us. Now, If you missed some of the other parts of this book and some of the commentary that I gave just like that, then you can find it at the Passive Cash Flow Club on YouTube. So feel free to go there. Make sure you hit subscribe. You will know when the new videos are coming out, and you'll also know when the answer videos come out. So if you have questions, I answer them on YouTube. I have a whole videoing day on Friday. I've actually rented a room and I'm going to go there, and we're going to video the whole day. So please send me all of your questions before Friday so that we can include them in that video day. I already have a few, but I would love to be able to make more. I know that I have a whole day to video, so I can do lots and lots of questions, and then we will put them onto the YouTube over time. So make sure that you send me all of your questions on Instagram, and you can find me at business_team_6_official. And I would love to hear from you, first of all, because I am really grateful and thankful that you join me every morning. And I am also very grateful for the questions you send me. And I'd love to be able to know your thoughts on the economy and different other things. And I would love to know your questions so that I can answer those and create those videos for you. Also, I was talking about cash flow earlier and how we're creating a 10-module system to teach you not only how to play the game so that you have the basics of creating financial freedom, of creating wealth, of all of those different things, how to invest properly, how to be a safe investor and not just throw money to the wind. So if you'd like to know more about that, and if you'd like to be a part of that, feel free to get in touch with my VA. So you can test out one game first, and then if you'd like to do more, you can. But come and test it out and see whether it is something that is for you. See if it's something that you're going to learn from, which I know you absolutely will. So come and join us. Let me know through Instagram, and I will get my VA to send you the details so you'll know where and when to join. And I am looking forward to meeting some of you in person, because I know that I see you here online. But I don't really get to know you, don't really get to see you. I know you can write some comments, and I'll get to that in just a moment. So when I finish the recording on Zoom, I'll quickly go and follow everybody on Bigo. But please do reach out on Instagram, not on Bigo. Bigo has a lot of spam, so it's extremely difficult to find the forest for the trees. But if you write to me on Instagram, I will be able to find it very, very easily. Okay, I'm going to stop the recording. I'm going to leave you to it. I'm going to leave you with the really important thing that you need to do, which is make the switch to unlock your rich. And I'll see you all tomorrow, Sydney time, 8 a.m. for another reading.